Good morning and howdy. My name's Dave Freitag. I am the Wall Street Cowboy. I'm going to be your host today on the Secrets of the Trade, Week 31 Bulls and Bears. We're going to talk about what led last week, what might have been lagging, and what we might look forward to this week, Week 31. It's Casual Sunday, and I'm coming from the beautiful big blue of the Sierras. That would be Lake Tahoe. Thanks for stopping by. We sure appreciate you. So sit back and enjoy the ride. And as they say, let's get her done. So let's take a look and see what led and lagged the week. This week we had the S&P 500's up just shy of 2%, up about 1.75% for the week. But leading the S&P 500 was the NASDAQ 100. They were up 4% this week. But even leading those was silver and gold, with silver taking off, leading all sectors that I follow. And the ones that were lagging, the VIX dropped heavily, about 13% this week. And gasoline was down about 8%. Take a look, see what else we had. We had the Dow barely breaking above water. It was up about less than 0.25% for the week. And we also had tech. Tech was a standout this week, up almost 2% on Friday, up very strong for the week. So we'll take a look at our different sectors, and we'll see if we can't find some opportunities for you. So sit back, enjoy the ride. All right, week 31. Let's start off with something that's a little bit longer term. What you're looking at here is a spreadsheet that I run. I keep updating from time to time, about 4 or 5 times a year. What I take a look at is the S&P over the last 10 years. And actually, I've got more than 10 years worth of data up here now. What I'd like to know is, what is the probability that the S&P is going to be higher tomorrow as opposed to today? And it sounds kind of confusing, and it can be confusing. So let me try to explain. What I look at with this spreadsheet is several different time frames. And I look at the 1-day time frame over the last 10 years. So here's the 1-day move, S&P 500. The number of times that we've had a 1% move or greater has been 325 times in 1 day. That's a 1% move in the S&P in 1 day. What about a 2% move? Well, that's happened 67 times. And a 3% move is a huge move in 1 day. That's happened 24 times. Now, how many days are there in 10 years? What's that? 262 days, trading days a year times 10 years kind of gives you an idea of how many opportunities there were. That is about 1% of the days out there. We've had a 3% move up. What about a 3% move down? Slightly higher. We've had 1.2% of all days have been down 3%. That's a huge move. This happened 33 times in the last 10 years. So what about looking at a 22-day move? Now, that is more representative of a month, because there's about 22 trading days in a month. How many times have we been up 2% over a 22-day period? Now, that's a rolling 22 days. So if today is August 2nd, 2020, then 22 days in the future, what has been the historical probability that we would be up 4%? Well, over the last 10 years, that's been, 4%, 18.2% of the time we've had a 4% move up historically over the last 10 years. There's been 464 times. So this helps me to make a decision on what kind of positions I might want to take. You might think that the market is down just as much as it's up. It's a coin flip that's 50-50. And even on a 1 day period, just looking at 1 day, 54.8% of the time, the S&P 500 is higher tomorrow than it was today, judging from close to close. Not necessarily the high of today versus the low of yesterday. That's not what I'm doing. I'm looking at the close of 1 day and comparing it to the close of the next day. And that's every day for the last 10 years. Almost 55% of the time. Now, over the last 10 years, we've had some pretty significant crashes and pullbacks and a couple of bear periods. I don't know that we've had some bear markets, but we've had some bearish periods that have lasted several months. 54, almost 55% of the time. What about over a 1 month period? 71.5% of the time. So what that tells me is if every day I put on a bullish trade, I would have made money on that if the trade expired in 30 days. It would have been higher than it was the day I placed a trade 71% of the time. Now that's an edge. You see, I'm not saying you can't lose money doing that. In fact, probably 31% of the time you would have lost money on that. But 71% of the time, if you did an even money, I'm risking $1 to make $1. 31% of the time you would have lost that dollar. 71% of the time you would have made that dollar. Now, I like to eliminate days where I am, I'm pretty sure or have a pretty good idea that tomorrow's going to be down. And if we're starting a bearish period, I probably wouldn't put on a bullish trade. But what happens today versus tomorrow may have very little to do with what would happen 30 days from today. So even in a bearish period, you can make money if your duration is right. Now, here's the one that really gets me. If you were to do a 60-day trade, in other words, 45 trading days, 75% of the time, the market is higher. So let's say I do a at the money bullish vertical on the S&P 500. 75% of the time, historically, I don't know what tomorrow brings, but historically over the last 10 years, and that's a good long period of time, 75% of the time, I would have made money on that trade if I'd had a 60-day duration. On less than 30% of the time, I would have lost money. That's significant to me. So just an edge that you might want to put into your trading, and gives you an idea of why I put my durations out for 1 month as opposed to 1 week or 2 weeks. The more duration we get, the more the probabilities work in my favor that a bullish trade will work in my favor. You can see there were 2,524 times that we had a 45-day move opportunity. So that starts 10 years ago, and I think I did it in October of 2009. So that's actually probably closer to 11 years. But there's been 2,500 rolling 45-day periods over the last, say, 11 years. So that's just a really interesting edge. Some other information that's up here. What's the largest move up? 12%. Average move up, 2.64%. Now that's significant. That tells me if I wanted to put on a um, a big, what they call a big boy iron condor, I definitely want to have my call side or my upper side at least 2.64% higher than the market is on the day that I open the trade, because that's the average move up is 2.64%. So 50% of the time, it's going to cover at least 2.64% to the upside, 3%. So if you're beyond 3% higher for your short strike or your risk on an iron condor, you have a better than average opportunity to hold that all the way to expiration and see max gain. What's the average down? About 3%. What's the medium? About 2%. You can see they're very similar. And the largest down was 17%. So this is just information you can use. I do this same thing for individual stocks. Interestingly enough, Apple does not have as favorable of a percentage to the upside. In other words, this number is smaller with Apple than it is with the S&P 500. So those of you that like Apple, you are in a much more volatile stock than the overall average market. So just to tell, and again, I do this for individual stocks. It only takes me less than 2 or 3 minutes to go ahead and download the information and put it in here, and the formulas are all going to be the same. And I can tell you whether a particular stock has a tendency over a 45-day period, over a 22-day period, over a 1-day period to go higher or lower. So it's something that I use, and it's been a big help to me. All right, so now let's get on to this week's Bulls and Bears. Okay. I've got Google up here real quick. I want to show you how I do this. I'm going to click on my little plus button. I'm going to go up here to FinViz. I'm going to open up FinViz. Now, this one is the non-elite version. This is just the regular free version of FinViz. So it does have presets that you can set yourself. It has most of the information. It just is delayed, and there isn't any pre-market information. So since this is Sunday, it's not all that important. And I could log into my elite version of this, but I'm going to show you this week that that's not necessarily required. So there's a couple of things that you can look at here that gives you some information, and the same information that I shared earlier today. The first thing you want to do is you want to go to groups. You look at your groups, and this tells you which sectors have done better on a 1 day, a 1 week, a 1 month, and it will go all the way down to 3 months and half a year and full year. You can get all that information. We can see here that tech was up almost 2% on Friday. And for the week, tech led all other sectors by almost 5%. So tech is surging. And if you had positions going into the week last Monday, a week ago, on the technology sector, you're probably pretty happy. And real estate is doing well also. Which ones are continuing to do badly? Energies did badly on Friday, and it did badly for the week. You can also look at the individual futures. So let's take a look at those futures, get the same information. You can look at 5-minute, hourly, daily, weekly on your futures also. You can go and look at your performance. And I like to look at the weekly. Now you can see here silver led all other sectors, and copper and the VIX were doing very poorly. We have Nikkei, we have Europe, and some of the foreign nations are starting to wane, which is a lot like it looked like earlier this year when the only place that was doing well globally was the United States. So let's take a look at a weekly picture of this. And again, silver led gold and was up big time this last week, up almost 8%, and VIX was down. Again, you can see that some of the foreign stocks, the foreign global stocks are not where you wanted to be over the last week. Over the last month, silver led all others. So it's up 36%. Now, silver may be getting a little ahead of itself now. We can see VIX has been where you wanted to be selling VIX. You didn't want to be buying VIX over the last month. So this is one way to do it. Another way you can do it, you saw last week how I keep a spreadsheet of my different ETFs. I'm fiddling around with it over here. These are my ETFs. I just take a copy of that, go back to my screener, and drop those into my tickers. Okay, now there is another way that you can look at this. You can see that telecom is leading and that basic materials is number 2. Now you can go to this groups header up here. You can click on that and it'll give you a 1 day, 1 week, 1 month. But you'll notice that these sectors, while there are some that are similar, there are some that are missing, like telecom. Telecom is not on this list, and it was leading our group, our sectors last week is telecom. But that's just another way. If you don't want to go to the trouble of going and finding all these different symbols, you can do it very quickly by just going to the groups, and you'll get a pretty good idea of what sectors you should be in. They're going to match pretty close. Basic materials is leading, and basic materials is number 2 on my list. It's up 6.89. Now these are probably going to be slightly different than what they have in the groups, because this group is probably using a different database of individual securities. It may not be using the spiders. It may be using a wider universe of stocks, but the spiders is going to give you a pretty good idea of the general sector performance. So which one is better than the other? There's not one that's better than the other. The one that's better for you is the one that you use week in and week out. Don't be switching back from the spiders ETF to the groups and then back and then individual industries within sectors. If you want to drill down that way, that's fine, but just do it the same way every week, or you're going to start getting yourself confused. So here's a screener. This gives us an idea. We're going to put on our symbols again real quick. Then hit your performance and sort them by the month. And I remember I have to hit that twice. And then I export this information and put it into my spreadsheet. So I'm going to go ahead and do that. I'm going to save you the trouble of watching me do that. And I'll come back to you when I have that all done. Okay, I'm just about done here. I'll show you real quickly how I'm doing this. I'm just going to go to FinViz. I'm going to go to my presets. Up here I have a preset of all the stocks that are in each one of the different ETFs as represented by the spiders. So the basic material, communications, energy, at least the ETFs that I follow for the sectors I follow. I'm coming up on the last one, which is the communication services. I've done all these up here. And I'm just going to click on that. That's going to bring up all of the symbols in that ETF. And I've got it sorted by the performance for the last month, the best on top, worst on bottom. I'm going to scroll all the way to the bottom and hit the export key right there. That's going to bring it up on an Excel spreadsheet. I'm going to go ahead and grab that off of Excel. I'm just going to copy and paste. Now, I don't keep this top line except for the very first one. The subsequent ones, I don't. I leave that off. I'm going to hit Control C to copy all that. I'm going to get rid of this because I don't need this no more. I'm going to hit yes. I'm going to hit Control V right there in that square. And now I've got all of the stocks in that sector sorted by which one has done the best over the last month. You can see the same cast of characters at the top, not week after week, but it's very common to see them in sequential weeks. For example, PLT was the number one last week in this sector. It happens to be number one this week. Last week, INFN was number two, and it's number two again. But as you go down here to number 4, VG, well, it's dropped to number 5 this week. So there are subtle changes. You can see that as an opportunity to say, okay, well, this one's surging or this one's starting to lose some momentum. But you can do that for each one. You can see that this was my list from last week, my bullish list from last week. We had Run topping the list, and then we talked about LVGO and CINF. CINF didn't have a real good week this week. We had AMD, which was at the top of the list. So let's see how well this week did. We're going to go back to FinViz. Okay, I'm going to show you how I do my filter to go find my bulls and my bears. I've come back to the basic screener screen, and I'm going to show you how I put in my filters. Now, for me, you can do things different. For you, you may like foreign stocks. I don't. So I just filtered out any stock from this list, this database, that is an ADR or a foreign stock like Alibaba and a couple of those other high flyers. I just I don't trust other exchanges, other countries, and how they allow companies to report. So I just exclude them, even European stocks, and there's some really good European stocks. I also like to make sure that they're optionable. If they're not optionable, I'm not interested in them. They're not actively traded. If I'm looking for some bears, I might also put in shortable, but most of the stocks that I'm going to look at are going to be shortable anyhow. So that's not going to filter out too very many. It could filter out one or two. I also like to have my the price of the stock between a certain level, so I put it in custom. I don't like high price stocks. I don't like low price stocks. I like them to be somewhere in the middle. Now, I start at $40. I realize that there are probably some $12 and $20 and $30 stocks that are probably pretty good. Just isn't what I like to deal with. I have a big enough list with those stocks that are over $40. I also don't like stocks that are too expensive. Your Teslas, your Amazons, your Bookings. I can't afford those stocks. I don't have $1 million account. They're over $1,000 a share. I just can't get into those, and the spread between the bid and ask moves too far for me. It may be okay for you, but it doesn't fit my trading plan. So I exclude them by just topping off at about 500, and even 500 is probably too much, but it gets the list in where I want it to be. Now, I go into this industry and I exclude anything that's a fund or ETF. Uh, uh, it's not that there aren't ETFs that would be good candidates, but for the most part, they just clog this up. And I'm not going to take too many positions in ETFs because they don't move enough for me. Then I want the average volume to be pretty good size. You can pick a number that you like in here. I like it to be over 1 million shares. There's no magic there, just what I picked. You could be 2 million, you could be 500,000, whatever fits your criteria to give you a big enough list, but excludes out the ones that you're just simply not gonna be interested in. There's just no liquidity in them, or not enough liquidity for you to get in and out of them efficiently. So even with this, I've got a huge list, at least 5 pages of stocks that fit this criteria. And now I'm going to sort this list just with these filters alone. It's going to give me plenty of good stocks to look at. So I'm going to sort that by their performance per month. Again, the first time you click that, it's going to put the worst performer, which was Intel. Had actually didn't have too bad of earnings. They beat earnings, but their forward-looking comments were not favorable. So I'm going to click that again, and it's going to give me my top performing stocks. Now, I don't see Run anywhere on this list anymore. Remember, Run was the number 1 spot last week. But I also do see Cincinnati Financial still near the top, but it didn't cut the grade because it's not in the top 20. See, I'm only going to look at these top 20. Is there a magic to the number 20? No, it just gives me enough. If you just wanted to look at the top 10, that's probably good enough. You got AMD, that was up another 11%. That was on our list last week. LVGO was on our list, and VAX. These all had pretty good weeks. So the concept here is if you stick with stocks that have a proven history of performing well over the last week, over the last month, the last quarter, you can have a bad week, but it still continue to stay on the top of the list. It's just telling you that there could have been something that was going on last week. Maybe they had earnings. Maybe they had some kind of a moderate pullback based on profit taking. You got to look at those and make your analysis based on the criteria you put in. But this gives you a list of stocks that frankly should perform pretty well. So we're going to take this and we're going to export this. I'm not going to keep this whole list. Once I export that, and so I'm just going to save this list real quick. I'm going to hit my Control-C. I've got that copied. I'm going to go ahead and get rid of this for right now. I'm going to drop that in. You can see here I have my header from last week. I'm going to put it right at the same place. This is for week 31. Control-V, we'll pop that in there. And now I have the list. Now, you remember I left out those last 2 columns, and what I put in there is the expected move, and then I put in the next column. I'm going to put in target, and I'm just going to come over here, and I'm going to make this height a little bigger. I'm going to make that about a 25. That should be fine. Going to make it wide enough. I'm also going to come in here to go to home, and I'm going to center all that, and I'm going to wrap my text, and now I can make these just a little bit bigger if I need to. But that will give me so that I can see what I'm looking at here in my headers. So I probably should make these just a little bit wider, and you can do that real simple. and column width. And instead of making it an 8, just make it a 12 or something. Now it's wide enough that you can see all that. I'll just grab this and make it a little bit bigger. All right. So now I can see what my expected move and target's going to be. So I'm going to put a formula in there that's going to give me that information. My expected move is going to be the price that it closed on Friday times the volatility for the month. So it's real simple. You go in there and hit equals, open paren, the price. It's going to click on that cell. I'm going to hit the times or multiply symbol. That's the little asterisk above the 8 on my keyboard. Then I'm going to multiply that by the volatility for the month. I'm going to close my paren and I'm going to hit enter. That's 9.56. I'm going to change that. I'm going to hit right mouse click right in there, and I'm going to make it less digits to the right of the decimal. I'm just going to make it 2 digits, and then I'm going to take that and I'm going to bring that all the way down here. So now I have the expected move based on the monthly volatility and the closing price for each one of these stocks that are in my top 20. It's pretty simple to do. Now I'm going to set my target. My target is Friday's close plus, because these are my bulls, plus the expected move. Now that's as far as I expect it to go based on the implied volatility, which is determined by options volume and a whole lot of things done by people that have a whole lot more money than I do. So we're going to put in there equals open paren, price, and then the plus sign and the expected move and close paren. And I know that $85.15 is my target for OSTK, and that is derived by adding the price on Friday by the expected move over the next month is $85.15. Pretty easy to do. Takes me less than about 30 minutes to go and do all this on a Sunday. You can do it on a Saturday if you like. And now this gives me my target prices if I decide to take a position in any one of these stocks. All right, so now let's go and get our bears. And our bears are going to go right down in here. And instead of performance best on top, I'm just going to hit this and put my worst on top. So Intel, Planet Fitness, Boeing's just getting buried again. That's probably a really good stock to look at to go further down. Beyond Meat had a real big push up, and now it's coming back down to support. So there's a couple of really good stocks. Gilead is another one, Shake Shack. So what I do is I go down and just export that again. Even though there's over 5 pages of information, I'm just going to export that. I'm going to open that export. Then I'm just going to copy. I don't need the header. I'm just going to copy this. I don't need this change in volume. I'm just going to come down here, grab the top 20, hit Control C to copy. I'm going to get rid of that. Yes, I want to keep all that information. And I'm going to hit Control V, and there's my bears for the week. And we're going to do basically the same thing we did over here. We're going to hit equals open paren, closing price, times the implied volatility for the month, which is column OF. So we'll come down here to OF, close paren. I'm going to make that less digits to the right of the decimal. I'm going to make that 2. And then I'm just going to drag that down. Now this one's going to be minus. Remember the one above was a plus because we are expecting those, there's our bulls, we're expecting those to go higher. So we're going to hit the equals, open paren, closing price on Friday, minus the expected move. Close paren, and that's my target. So if you take $1.23 from 47.73, it's going to come to about 46.50. So that makes that real easy, and that's now my target price if I decide to take a position in any of these stocks. Now, the other thing that I like to do is I like to grab my list from last week. Here's my list. These are my bulls. So I'm just going to copy those. And I'm going to go back to FinViz. And the first thing I'm going to do is clear all these filters out. There's probably a pretty fast way to do it, but I just click on one of those headers and then click back, and it clears them all out. And I'm going to drop that into my tickers. So those are the 20 stocks from last week that were my bulls, and I'm going to see how they perform. So we're going to hit our performance. Now I really only care about the last week. You know, who are my best performers? Now we had 20 stocks that we thought could do real well. Remember, Run was our number one. Well, it dropped 10%. And remember, we talked about Run. It had a pretty strong move up, and it was a newcomer to the list 2 weeks ago. So when they start to get parabolic, then there's a really good chance that people are going to take profits in them and then they're going to pop down. I'm not saying that it can't go up because it does have some good numbers, but for the week, it had a bad week. Cincinnati Financial, we talked about that last week. The financials couldn't get any momentum behind them last week, so Cincinnati Financial followed the sector. But out of those 20 stocks, we had 12 of them, so more than half, had a good week, a positive week. Some of them had better weeks than others. This one was up 42% if you'd been able to take a position in it. This one was up 16%. AMD was up almost 12%, 11.5%. So those were all stocks that were on the list. Roku. So let's go ahead and we're going to grab this. We're going to export it. And I'm going to open that up. And I just keep track of this. So the number one performer, and again, I don't need these last two columns for this. Just going to do that. Control C. Don't need this no more. Get rid of that. And I'm just going to look where I format these. That looks like I put them right about there. And that's my list. Now I know that of these, I had some really good, these top 11 or 12 stocks did really well. So I'm going to go find this and LVGO. I'm going to hold my control key down and click that one also. AMD, and there it is, and QDEL, and that was number 14 on the list, and NVAX, number 4, IAC, and CVNA, and Roku, and PHM. That's got to be a pharmaceutical. FDX, near the bottom. And then ENPH, and the last one is HCA. So those were the ones that had good weeks. And I'm just going to right mouse click, go in here, and I'm just going to change the color on those to some shade of green. So I know that those were the stocks that performed well out of the 20 that were on my list. Kind of simple. And then I'm going to do the same thing for the ones that I thought would do poorly. Beyond Meat, Planet Fitness, Intel, they were all on the list last week. So there's probably some pretty good opportunities to have gone short a couple of these. And hit Control C. We're going to go back to FinViz. I'm just going to clear all those out and put the new ones in. This is my list of 20, and I'm going to sort those by the worst performers for the week. I'm going to export those. Open that up, and I'm going to drop them in here. Control C. Get rid of that. That's done. And then of that list, we had 8 of them that performed badly. Now, the rest of these, some of these didn't have really good weeks. If you'd have put on something like a bearish butterfly, these probably would have done okay. You probably would have made some money on those, or at least been broke even. We did have a few that really did perform well that were on our list. Again, this isn't going to give you 100%. You got to look at this chart. You got to look for the setup that you want. GoDaddy actually had a pretty good week. I expected them to be further down this week. And I just do the same thing, but a little different in that I don't go green, I go red. I don't like that shade of red. Let's go a little bit lighter shade. That's all right. All right, so now I know which stocks did not perform this week well, and perhaps I was in one of these or more, just depending on your outlook for the week. So that's how I come up with my bulls and my bears. And next, we're going to go through how I set up my outlook for the week as far as my directional buy. Okay, so we'll wrap this up pretty quick. Last week, I did a video on how I use these different indicators to determine my outlook. So let's take a look at the SPY. I could put the SPX, or you could put your favorite type of index in there, and maybe you like NASDAQ stocks and you want to follow the QQQ or the futures on the NASDAQ 100. But I always choose the SPY. Now on here, I've got the whole moving average, the RSI, the GWIR, the high-low activator, and the market forecast. In addition to that, I have the DMI oscillator. I have the PPS, which is the John Persons proprietary system, I think is what PPS stands for, and the Ready Aim Fire. Some of these are proprietary, so you might have to pay for them. Others are only available on the Thinkorswim platform. They may not be available on your platform. The clouds in the back give you an idea of whether I'm bullish or bearish based on that indicator. So in this area here, I would have been bullish based on the whole for the SPY. In this black area here, that just means that we're in transition. You can see that the trend was transitioning and it went into a bearish trend. Now, sometimes we can get those areas and they don't confirm. It just means that this moving average has changed its direction, or this moving average has changed its direction, and it can change right back the very next day. In other words, we can have an up day, down day, up day, and this could change based on that and be in transition. Just generally means that we're in consolidation and there is no real trade going on. So we got the whole telling us we're bearish still. We have the SPY, the RSI Laguerre telling us we're bearish. We have the market forecast telling us we're bullish, and we have the high-low activator telling us we're bullish. Now, I want to point out that with this, we've got this this blackened area, this dark area, actually just no cloud is what it is half of one candle and half of the one before it. Well, that means that we have already completed, see, between the two, we've already completed the transition. So there's a very good chance that this will turn green based on tomorrow's performance. If we have an up day on Monday, then it will color this, half of this green and half of the next or tomorrow's candle green. So you will see this kind of an area with a transition. Actually, it may be better to look at it here. This kind of an area with a transition into green. And that could very well happen. We could have half of this in green and half of this in next candle in green. So overall, I am slightly bullish because I have no red clouds going right now. I have nothing in red. I have the DMI oscillator, which is positive. My last signal on the PPS was a buy signal, which happened on Friday. And I have a buy signal here on the Radium Fire. So pretty much everything is pointing to a transition out of bearish to bullish. So for this next week, I am what I call +1 and potentially a +2 based on what happens on Monday. If we transition to everything being green, there's no reason to be just a +1. We would be moderately bullish. So that's my outlook on the SPY. Well, I've taken a look at the QQQ since they had such a strong week and see if they look any more bullish. And that it gives me some confirmation in that direction, if in fact that does. Again, we're in transition here in the whole. We're in transition in the RSI or relative strength. We're bullish, and we've been bullish on the NASDAQ for quite some time with the DMI. I have a bullish signal here on the Radium Fire, bullish PPS, got a bullish high-low activator. I got to be pretty much the same on the NASDAQ. I got to be bullish, +1 minimum, maybe a +2. So that's how you take a look and make a very quick outlook, directional bias. If we break down on Monday, unless there's news that supports that, then I would be looking at it as an opportunity to buy a dip there. Last week I was bearish on the week, and we were in fact bearish for the week. This week I'm bullish, and I'll be looking to take some bullish positions off of my bulls list. Well, I want to thank you for stopping by and checking out week 31 Bulls and Bears. If you like what you saw, go ahead and hit that subscribe button. Tell your friends and come back often. We sure like having you here. As always, just want to remind you that we don't make suggestions or recommendations for your personal situation. We haven't done any kind of a needs analysis for you. We don't know what your risk tolerance is, and we don't make recommendations on individual securities. So take everything we went over today for educational purposes and add it to your trading plan, as is appropriate. Again, thank you very much and good trades.